This is the Trade Talk Showcase on Brownfield. I'm Amy Simpson, and we're here today with Beadle with CHS Hedging. To start off, marketing decisions can be hard, especially in a year like we're experiencing right now in 2020.
Yes.
What are some of the ways that growers can prepare themselves for year-end planning, or what are some tips you have?
Well, I think one of the first tips is to maybe try to keep your memory a little bit short and forget what we've been through this year, because it's been a very, very difficult year. But then we have to look forward, and we have to do the kinds of things that have made marketing successful in the past. This was a hard year to make decisions. A lot of decisions were made that people would like to have back because we got an awful lot cheaper than we thought we were going to get. And then we've turned around and rallied and gotten an awful lot more expensive than anyone ever dreamed that we would be able to be. And that's really gotten people emotional. And we need to put the emotion aside and start planning for next year. So what do we need to do? Well, we need to do what we do every year. We need to go and start to put together a marketing plan. And that starts by looking at your costs and the gross dollars per acre required to make a return on your assets and equity. And then we have to start, moving to execute against that plan. And that means making incremental sales for next year's corn and soybean crops, wheat crops, or other things if you're growing other things, livestock obviously as well, and do it without emotion and without looking back and saying, boy, that sure didn't work very well last year. Well, we have odd markets every now and again. I think what's going to happen is, with tighter balance sheets and a more normal sort of price structure, a more normal marketing pattern, we're going to have a more normal marketing year, and we're going to have an opportunity to better take advantage of marketing opportunities than we've had the past year, and maybe even the past couple of years or past few years. So we have to make a plan and then go and execute it. That's what we need to do.
Sure. Great advice. And what are some of the commodity market updates you're seeing, and how can farmers look at that, and what are ways that they can, manage that risk?
Well, so obviously our balance sheets are tighter, and the marketplace is acting very well. Prices are rising, and they're still rising, and they're rising again today, even after what was a pretty rough start to the day. Markets are well supported. So, what do we do? Well, again, we have to unemotionally go back to the costs that it's going to take to run the business and start making some incremental sales, understanding that, we've got a good situation and prices might rise. But if we don't start somewhere, then we risk having the market go all the way up and then turn around and go all the way down. And we don't want to do that. So that being said, it's worthwhile to have some reasonable objectives. And for that, I would look at some recent history, and maybe some history in the years where our balance sheets were in fact a little bit tighter. And so you can, let's just take soybeans for an example. We would note that the high water mark over the last 6 years has been 12.08 a bushel. And we're approaching that level, and there's probably going to be some resistance there. An old low from that time period, from 2011 or 2010 to 2014, there's some major lows at 12.50. Old lows can be resistance, when you go back up and meet those lows. So 12.50 is probably the next point. And then you get all the way up to about 14.50, and some significant highs in 2011 that occurred that year. So, these are all potential areas where the market could go, but you can't possibly know Are we going to stop at 1208? Are we going to stop at 1250? Or are we going to go all the way to 1450? There are a lot of variables that are going to determine, how high we actually do go on this rally. South American weather is one of those. Any changes to Chinese policy toward the United States obviously would be another one. We're not expecting any changes from China right now because their internal pricing is such that we think that they want to continue to buy U.S. products. And we think that they're going to continue to try to execute against that phase one agreement. But South American weather is important, and a couple good rains could change the outlook dramatically. So it's worthwhile to have your targets, to have scale up orders in there, and to not be afraid to execute, even though, there are circumstances in which we could go a lot higher.
Sure. And if growers have questions or want to know more information about some of these tips you have, where's a good place for them to go for more information?
Well, our website is www.chshedging.com, and we have a farmer advisory service called AgSurian. www.agSurian.com. You can get more information there. Otherwise, our 800 number is 800-328-6530. We'd love to have a chance to talk with you.
That was Kent Beadle with CHS Hedging. I'm Amy Simpson with Brownfield Ag News.